momentum is continuing or not. Amit Gupta is now joining us. He's Senior VP and Fund Manager at ICICI Securities PMS. Amit, good to have you with us here. Good afternoon. Straight off the bat, we've seen a correction. It's still debatable whether the correction is behind us or, it's still in front of us. But in any case, we've seen some pullback. What is looking attractive to your mind? And, stuff that you like, where there was no margin of safety, which you wanted to buy, which has now become a little attractive. If you can go over some of those names. Go on.
Yeah. So I think some correction has already, come in, and there were some jitters because of elections also on the domestic front before we were moving into state elections. And we have seen that the Nifty always, tries to make the new highs and then goes into consolidation. And this time, because of this geopolitical crisis, it got a chance actually of some correction. I think it's a healthy point for the market. Just one point before moving into sectors. If you see the positive path of mid cap and small caps right now, it has grown by actually 25%. And if you see the market cap of mid cap, it has run up by 40%. Market cap of small cap, it had run up by close to 50%. And then this correction came in. So there were jitters that they were, a little stressed. But if you give some comfort from other data, if you see the losses in the corporates and you combine with the profits, because generally we look at the positive path and we see the incremental growth over that. But there are corporates where losses are reducing. So if you combine the losses, the net figure has grown by 80%, which is very substantial, actually much higher than the market cap they achieved. And this is where I think, and it has gone 80% in the small caps and 50% in mid caps. This is a reason actually, I think in this correction, the market is throwing some opportunities. For example, hotels is one segment. I think PSU banks is another one. Telecom, that is another one where I think the numbers are going to be much better going ahead. The power space is the one where I think some correction is coming in. But going forward, we are very bullish because the peak power demand is rising in excess of 8% now. And I think this is very, very encouraging for the whole sector. So there are, things which are coming in. And if you see from the valuation perspective for the overall index, the 5-year average price to earning is somewhere close to 19,000 now. And 10-year average is somewhere close to 18,000. And I still remember in the last calendar year, 2022, when the correction had come from 18,000 to 15,200, that time Nifty had declined, had come closer to 10-year average price to earning. And we saw almost $14 billion of FI flows, despite the fact that dollar was moving up very sharply that time. So dollar index was touching almost 115. So dollar index is not 115 right now. Rather, it is close to 106. And crude is still around 85, 86, despite 20-25 days of the war of Hamas and Israel actually going on. So I think these are some comforting points for the Indian markets when somebody is looking for investment.
Amit, you said Telecom throws up an opportunity. Here, would you go with stocks like a Vodafone Idea, Indus Stars, where there is a little more element of risk attached to it?
So they were not part of our portfolio, and we will not go in those stocks. We are very clear that if you see from the average revenue per user perspective, the best in the industry is coming from Bharti Airtel. It was around 190 before, and now it has crossed 200. So it has come almost to 203 in this quarter. And I think this is one major indicator which the market participants are looking at, because subscriber base in any case, it was coming in favor of Bharti and Reliance. We had already seen a 5G capex to some extent happening. Now they are talking about 6G also going forward. And the enterprise use of 5G, I think those applications uses are there going forward. So whether it is IoT or so many things going forward, so that will add on the revenue. And I think the free cash flows are going to come now. So in this quarter, you have seen, despite giving some spectrum, high cost spectrum charges, still they are coming out with a free cash flow, though it is little lower, around 2,500 crores. But we expect in the coming 2 years, 400 billion rupees of free cash flows are expected from Bharti Airtel, which is the key. And ARPUs are another key. If you see the mobile data revenue growth, it is also coming up. And they have added market share gain actually in the postpaid segment. So previously, I still remember, if you see the postpaid additions, it was around 4 lakh, but now it has come to 10 lakh. And this is, I think, a major factor for the growth of this. And that is where I think Bharti remains our top pick in the telecom space.
Okay, so you continue to like Bharti Airtel. Got that, Amit. Good afternoon. Take us through what what cues you picked up from L&T, and let's talk about the overall related space. I mean, infrastructure. With L&T, I think every quarter it's the same story. Business is growing, order book is swelling, but their legacy orders continue to dampen their margins. What do you think of the stock right now? And if you were to take more positions, more bets in the infrastructure space, then what would you look at?
So L&T remains our top pick. And I think if you see from this leader what's happening, their market share gain, we understand there are many things happening on the domestic front from the government. Those orders are increasing, but also from the GCC countries, because crude also plays around $85-90, which is comforting even for the Middle East countries. From there, its market share actually has now of the overall order book has grown to 35%. And I think this is where the company now is definitely doing good. In fact, generally, we talk about order book and then we talk about as a question mark about the execution and the cash flows. So we have seen that the cash flows are equally very robust, either from the government or from the Middle East. And along with this, we have seen that one of the critical indicator in the infrastructure is the working capital to sales. If you see the working capital to sales, which used to be 22% last year, surprisingly, very positive surprise, now it is almost touching 16%. 16.5%. So I think this is really positive from the operational leverage perspective when you are already seeing a robust order flow guidance. And this is where the actual profitability jumps in and the stock prices performs. And I am not surprised to see that they increase the buyback price also by almost 200 rupees. And this is the sort of momentum the stock is in. And I think this is where in any opportunity because of the market decline, obviously healthy consolidation can happen for some more time. But in that, if you see the decline, I think it remains one of the top pick from the infra space, no doubt about that.
Hi, Amit. Good afternoon. What about Mamaearth? Any view out there?
So we are still, considering we have not looked into this. In fact, the whole, the consumer space for the time being, I think the problem is the mass segments, which are completely hit because of, the inflation and the rural segments which are coming up. I think urban consumption is one which is going to drive the segments now. And that we have to see. I think high-end consumer spending is picking up in India in various segments that we have to see going forward. I think possibly some hotels, maybe the bets that you can look at, or maybe premium housing. I think that is another one of the consumption thing. You can talk about investment, but from the consumption angle also you can see, I think that is where the money is moving. You have seen that Hiranandani, they have clocked 1,100 crores within a week. You have seen that the hotels numbers are coming good. So that throws an opportunity in this decline, I think. So Lemon Tree from the consumption space remains our top pick. We believe that this is a small cap, 6,000-7,000 crore market cap, but had some debt in the book. And if you see the tariff rate increase, it is coming almost 16-17%. So if they continue to do so, because of the gap between demand and supply, so demand is coming around 5%, 6%, 10%, almost 9.7%. And the supply is around 5.2%. So there is a good gap, positive gap actually between demand and supply, which will keep on throwing a good profitability for these hotels, I think, going forward.
Okay, you continue to remain bullish on the hotels from Mamaearth. The valuations actually are very, very high. Even if they do 100 crores this year, it's at 100 times. So let's see how that goes. But final question, Amit, before we let you go, there's plenty of debate whether or not you should be going to the large caps or the mid and the small caps. One would be that the valuations, of the mid and small caps, they've run a little ahead of themselves. But the other point is actually losses of some of these mid and small cap companies are coming down. What's your view?
Yeah, definitely. So losses actually, if you see it is coming down, look at the case of hotels only. So they were in losses in the time of pandemic. Now those losses are reducing because they are increasing the tariff rates, demand is good. And it is happening in some other sectors also. So that's where actually not only the positive PAT we need to see and the growth from there, which I said that it is around 25%. We also need to see the losses along with the profits and then see the growth for the corporates, which is really substantial for small caps, as I said, 80%, and mid caps, it is around 50%. So you can justify the valuations to some extent in some of these spaces. And I think this is where the key is. But as you said about large caps, they have not performed for the last 1 year or so now. And the large cap to GDP, large cap market cap to GDP, if you see, it used to be 100%. In 2007, but right now it is much lower. It is, I think, around 65-70%, which throws some kind of opportunity for the overall Indian markets, because if there is room in large caps, you cannot expect one-way fall in the mid and small caps. because somewhere the large caps will start performing whenever the FI flows starts coming in, and then you will see the broader market also starts catching up. So this is positive that the large caps have kept a lot of juice in themselves, but they may not perform or very sharply in the very short term. I think they may take their own time because the outside world is in pain. The higher interest rates will have their own toll actually on the markets, and this is where the broader market will keep on participating despite the intermediate hiccups which we are seeing right now.
Amit, very briefly, do you have a view on contractors? I mean, EPC companies. I'm referring to one particular name. I'll tell you, Jayaprakash Associates. Now, they say turnarounds rarely turn, but sometimes they do, right? I don't know if you've looked at this company, its long trading history, but the recent news is, and again, people have been waiting for something to happen for a while. We don't know if it'll happen or not, but ICICI Bank, which is one of the lead bankers and the promoters of JP, seem to be, this came from NCLT itself, that they want to settle the matter outside of the NCLT process. And of course, I mean, there will be other hearings, but it's a long wait. It's been a long wait, but it's moved up some 35-40% recently. Would you even give it a look, in your opinion? Any thoughts?
So frankly, the returns can come in some of those stocks which are heavily beaten down, but the kind of risk they have, it's a very difficult call to take in your portfolios, because ultimately you have to see the return per unit of risk. From that perspective, if I have to take a call, I will go into the power space. As I said, I think power transmission, power generation, those kind of things one can look at, where return per unit of risk is much better than these companies.
Amit, we leave the conversation here for now. Thank you very much for joining